Hi, welcome to the Market Alert for Thursday, the 1st of May 2025. Due for a pullback or just getting started? Obviously meaning a new market move to the upside. This rally might be running on fumes. I disagree. I'm expecting it to go back to the all-time highs. US stocks finished mixed with price action choppy after soft data. And markets chop to soft US data as well. They weren't that choppy actually. And green shoots for the greenback. Yes, I mentioned this yesterday that we could see a bounce in the US dollar purely and simply because it's so oversold. Economic news, well, there's not too much today. It's President Trump speaks, which he did. And that was an interesting headline, wasn't it? Let me just see if I can grab that one for you. So this was the headline. Trump makes $8 trillion claim on day US economy shrank in worst performance for 3 years, but that didn't stop the market from moving higher. So that was at 1 a.m. and then all day bank holidays today for Europe. I'm not getting the German Dax or any prices on the German Dax using the Trade Nation platform. The IG index one is working, but otherwise it seems like it's shut for the day for Trade Nation. Unemployment claims 1 p.m. 1:30, 2:45 for final manufacturing PMI, and 3 p.m. we've got ISM manufacturing PMI and ISM manufacturing prices there. So let's see what happens as far as other news is concerned. Maybe a quiet day in Europe, and we'll take it from there. But let's move along, have a look at the markets and kick off with the Dow. So in the Dow, yes, choppy on the basis that the market moved down, but then moved back up. We're above the 40,000. Everything's great. We're above the 50 EMA now. The next upside target for the Dow is the 200 MA. If rates are cut next week, then we can expect an explosive move to the upside. Yesterday, market was down. Then Trump spoke and the market moved higher. So we got rinse, repeat, exactly the same, whether it's Biden or whoever it's been. In the last 10, 15 years since we had QE. Markets are going to go back up. They always do in the longer term as far as being pumped with QE, lower rates. And like I said before, the Fed have said if there's anything wrong with the markets, any downside, they've got the tools. I did watch a video the other week. They've got 10 trillion on the sidelines ready to bring in to support the markets and the US economy. So it's, like I say, rinse and repeat. Everything continues the same despite the fact that things are falling apart. But that's the way it is. That's how it works now. So in the German DAX, this is on the IG platform. This moving to the upside, heading to the 89. It's not going to be long before we're back to the all-time highs. Just draw that one in for you. Slightly different on the IG platform. 23,477. So we just get the 89% retracement out of the way and then head to the all-time highs. And today is a great day to do that on the electronic session because the cash market is closed. So the futures market and derivatives is the ideal candidate to move prices to the upside there. And in the S&P, this is breaking out nicely now. Up to the 200 MA is the next goal there. We have got a couple of resistance lines in between, but the market will want to get back above the what's known as the death cross, get above there and keep moving to the upside. 30-minute chart, same as the Dow. We sold off initially and now the market's being brought back and expect more of this. Same in the FT100 as well. Up again yesterday. Storm was going to be thrilled. And again, we're heading back to the all-time highs, as we can see there. And we got a V-shaped correction there as well. Market moving back to the upside. I disagree, as I've said before, with any sort of crash coming. Don't see it. I just don't see how that's going to happen as we've lived through all of the other crashes. And then they've just brought the market back by printing more money. And they'll print into oblivion. We know the US dollar is only worth 3 cents of its value compared to 1971. It doesn't matter because with the sophistication of computers, programs now, algorithms and now AI, anything is possible to keep these markets on the upside, whether we like it or not, or it's a true reflection of the fundamentals, which it certainly isn't, but there's not a lot we can do about it. As a trader, you've got to trade in the direction the market wants to go. 30-minute chart yesterday for the FT, down in the afternoon, but back up overnight and heading back to the high of yesterday as well. Green shoots of recovery for the US dollar, absolutely. We're going to get a retracement on this. Let me see if I can bring up some fib retracement lines on this. I would say from there to there is where you're looking at, so 50% back over. We've already, well, at the moment we're at 99.99. We're going to break 100 for sure before we get any FOMC decision next week. So moving back to the upside for the dollar, which means there's massive pressure on the metals. So let's have a look at those. And as I said in yesterday's alerts, 31.95 was the downside target, and also the 200 MA. 200 MA is going to be hit today. The markets are quiet in Europe. The US is free to slam this lower. And then tomorrow we've got Smackdown Friday, so 31.50 is no problem. In fact, I'm less optimistic about this, and I think we could go down to 78% retracement if the dollar gets a bit of a spurt on as well. So we don't be surprised if the market breaks the 200 MA during today. Let's have a look at the 30-minute chart, and there you can see already down past yesterday's low. Get a small bounce, smack down at lunchtime, as we get most days, probably 9 out of 10. Meanwhile, gold also under massive pressure. This to me could go all the way back down to here as well, down to $3,000 an ounce, as this was a massive spike, end of a parabolic move. I'm not saying it's not going to go up, it certainly is, as we get closer to the end of the postponement of the tariffs, but at the moment it gives them the opportunity to send it back and make it a lot cheaper. So 30 minutes of gold also way past the low. This is going to continue lower as well during, like I say, the next few weeks. And let's have a look at the gold-silver ratio. And in the gold-silver ratio, still got that gap to fill. I have no doubts that it's going to do that either. Just needs gold to find a bit of support, silver to move lower, and mission accomplished. So again, there's no narrowing or spike coming in silver. So that means that we're going to see the gold-silver ratio moving to the upside there. Right, let's have a quick look at yesterday's 2-minute trades. So the market's choppy yesterday, but once they opened, they traded up to the high, went straight through up to the R1, and then came back to the high where they found a bit of support. And then we had a potential sell signal that wasn't filled. We had a buy signal. They weren't happy with this, let's put it that way, and they slammed the market down. And you'll see the market come back down in a moment, all the way down to the 200 MA following this potential sell signal. We get a bit of a rally. They're trying to keep it above the high. We get another sell down to the 200 MA where we get a bounce. And then we head into the mid-morning where we're looking for the ADP numbers and the also advanced GDP. The advanced GDP was bad news. As you can see there, this sent the market down and the DAX all the way down to the low. We then had a potential buy signal kicking off with the Dow, but unfortunately this was stopped out as prices move low. But again, you can see them buying back in at the low there. And then of course we moved on to more news, and then we saw Trump speak, and the market just turned around and moved all the way back, as you can see there, all the way back up to the close, and staying above that area into the early part of the evening. And as we motor through this, we go all the way back above the high. So certainly two good swings yesterday, from the highs to the low to back again. And this is when Trump was starting to speak, and that 8 trillion announcement was made there. Right, quick look at the overnight market. And this is on the IG platform. If you trade with IG, this is trading today, but if you're on Trade Nation, there is no German DAX today. For some unknown reason, they close, and which is bizarre when you think of all the other markets still trade an electronic session, but there you go. So yeah, already above yesterday's high in the German DAX. We've just had a spurt. The market's quiet, and traders in Europe will be missing action, taking advantage of the bank holes, and we're seeing it there. Prices are already above the high and set to move higher, no doubts, today, as well as the US markets continue to move higher in what is now officially the twilight zone. Okay, that's it for this one. Let's see what happens today. And of course, we're going into another holiday weekend in the UK. We're open tomorrow, but closed on Monday, so keep that in mind as well. Right, that's it from me. As ever, thanks for watching. See you in the next one.